Our next speaker is Moreland, co-founder of Teaminvest and founding director of the Conscious Investor Fund. He spent the last 16 years working with over 600 high net worth investors who target double-digit returns from their equity investments. His presentation topic today is the Conscious Investor Fund, mirroring Teaminvest principles and success. Welcome to the presentation, Mark.
Thank you, Angelina. Okay, so I'll just rip through, obviously, our general advice disclaimer. This is not personal advice, and you need to make your own inquiries and make your own decisions. I'll start off in an unusual way. I think, if anything, there's, I'm sure you're all aware, there are thousands of funds out there. And rather than give you all the details about how our fund works and then tell you what the results are, I thought we'd start off on the results. And then you could decide whether it's worth listening to the rest of it to find out how we do it. So on here, I've got, since inception, the Conscious Investor Fund, which is 11 years, has achieved $3.15 million return in cash to investors based on $1 million put in. So that's in reinvesting the dividends, and that's compared to the benchmark index, which is 1.5 million. So in just under 11 years, the Conscious Investor Fund has doubled the return of the index for investors, which in my opinion is pretty spectacular. And it's much more meaningful than just talking about percentages. And interestingly, that is after all the costs and performance fees. So that's even makes it even better. But what I'm going to do now is explain to you how we do that. And it's very, very different to any other fund out there. So we've got a unique story, and I don't have a lot of time, so I'll try and gallop through it and give you a good understanding of how it all works. So how do we achieve a consistent outperformance? And by the way, the outperformance is on every time period. So 1 year, 3 years, 5 years, 10 years, since inception, we haven't had one period where we've underperformed the index. Well, it's all thanks to Charlie and Warren. So everyone obviously has heard of Charlie Munger, who's recently departed, unfortunately, and Warren Buffett, who I would argue are without doubt the most successful investors in history. And Buffett's effectively turned a $50,000 investment when he started Berkshire Hathaway to now about 700 billion, depending on when this goes where. So, and most of that's been through passive investing. So he has chosen companies to invest in, and he's had a very, very specific methodology, and he works on principles which have not changed. So he's consistent right through. And if you go back and read anything he said from 50 years ago or 60 years ago, it's basically exactly the same. I've been to 13 AGMs at Omaha, and every year he does not change. I mean, the stories are different, but it has been very entertaining. But they've been consistently building their wealth at a time where the world around us has become more and more complex and complicated, and very difficult to get your hands on what is a sound strategy and what isn't. So it's not just them, and what Buffett's done, apart from being super successful, he's also had an approach of simplicity is the ultimate sophistication. So he's always worked on keeping things really simple and basic so that anybody can do it. Now I'd say he's a polymath, a genius, but the way he invests, you wouldn't think so. He brings everything down to basic principles. Anyway, we were very lucky to meet John Price. He was the professor for maths finance, double degree at New South Wales Uni, and he started making Buffett his research study about 30 years ago. So he's had a long history with Buffett, has written several books. We got to know him quite well. And basically what John did is he designed a system to replicate Buffett's investment methodologies. So in other words, every measure that Buffett used has been factored into Conscious Investor, the program, which is initially was software. And that has a 23-year history now of consistently outperforming the index on its own. And then basically what it does is it filters down the companies. If they fail one of Buffett's metrics, they're out. And the whole idea is to simplify your investing by reducing the target audience from, say, in Australia of 2,200 odd companies down to about 60 or 70. So there's only about 60 or 70 companies that will pass. That doesn't mean they're a good buy either. It just means that they meet all of Buffett's metrics. And then that's basically what we use as the basis of what we do for our research. So how does it work? So it's a 3-step process, and basically it's a process of elimination. As I said, we start off with 2,200 companies on the ASX, and we cull it down very quickly. In the first stage, it's a filter. We only look at companies that pass what we believe is what Buffett would accept. John developed some quite brilliant stability measures where we've been able to prove that we can forecast earnings growth over a 5-year forward period with a high degree of probability for certain companies, not for all companies, but companies that have certain characteristics. And then the stage 2 is we get those companies and we research those businesses. We look at their strengths and weaknesses, their moats, their risks, their alignment with management, skin in the game, found mentality, etc. And we score all of that and we further eliminate companies. So the whole idea is we don't even talk about price until a company's gone through our whole process in Teaminvest before we look at return. Conscious Investor became part of Teaminvest in 2008, which is basically very early when we started Teaminvest. So who's Teaminvest? It's a bit complicated, I'm sorry, but we'll deal with this. It's a private membership organisation for those who wish to manage their wealth wisely rather than pay others to do it badly for them. Shared wisdom for long-term investors, and members typically target 15 to 20% compound return, and that is generally achieved. Some higher, some are lower, of course. A lot of it comes down into your behaviours and biases and things like that. But we work as a collaboration, as Angelina said. We have 600 members and we all work in teams to help each other in identifying what we call wealth winners, which are companies that are going to materially improve our wealth through one or more economic cycles. So our aim is to be better investors for long-term wealth creation and preservation for ourselves and our families, which I think is a worthwhile aim, and I don't think anyone would disagree with that. So our step 1 filter, a triage, is Teaminvest members in Melbourne in this group. We do it by every state in the country, and we score all the companies that pass. We discuss them, and we work, and members vote on which ones they want to put effort into. And step 2 is in-depth research, and in this one we actually focus on understanding how the business makes its money. We look at the moats. We have a scoring system for moats, which is their competitive advantages and sustainability, which, by the way, goes to likely stability of earnings in the future. We also look at risks and score those. And then if the company passes that process, we then move on to the 3rd stage, which is return. It's the only time we actually look at price. And the key thing on return is we look at the stability of earnings over the last 6 years and the likelihood of them being able to continue that growth rate or not. So we adjust it to what we think. We use Conscious Investor's statistical analysis as well. And that'll give a number of saying we think it's going to earn this, therefore we can work out what we can pay for it to achieve an acceptable return. So in other words, we're not trying to value a company. We're trying to say, if I buy or invest in a company at X dollars, what will I get in the next 5 years compound, and how likely is that? Now, it doesn't mean we start in 5 years, it's a rolling 5 years. So we're long-term investors and we're not traders. So what's a wealth winner? A wealth winner, to be a potential wealth winner, a company must demonstrate a consistently high return on equity, achieve that with little or no debt, and have earnings that are rising with high stability. And as members, we seek to own these companies by acquiring their shares at reasonable prices to give us predictable future returns. It's exactly the same for the fund. So I've got a QR code here if you'd like to take a snap of that, and I'll bring it back at the end. That is a Discover the Secrets of Buffett. It's a white paper we did, but what you'll find in there, it shows how we use all of his principles within the fund and within Teaminvest. So you'll find it very interesting. It'll be very useful for you as investors anyway. So I recommend that. So Conscious Investor Fund, it was created in 2013 to provide passive, high-performance investing options for Teaminvest members and their families. Basically, if members didn't want to manage their own money anymore, or they're getting too old, or they had health issues, or didn't have time, or whatever, that's why we created it. It's never been marketed per se. It combines both the proven Conscious Investor software and the intelligence and insights generated by Teaminvest members. So how's the fund different? We don't charge fees. That's a big part of it. So we have a subscription fee which is fixed no matter how much money you put in the fund. So that's quite incidental, and we lose money on that. So we make nothing unless our unit holders make a profit first. We follow consistent proven principles like Buffett. So we are rules orientated, and we've been very consistent for the 11 years. And we focus on EPS growth and probabilities 5 years out. We are long-term investors, not traders. So we have very little activity in our funds. We don't chop and change all the time. We're basically building positions on weakness in companies that are wealth winners, and we've proven that has been highly successful when we've demonstrated it in the fund. We're not interested in consensus or following the herd. We don't care what anyone else thinks, and we don't have a few analysts. We have over 600 highly successful members who work in collaboration, and that team power and their experiences and their connections and knowledge has proven invaluable for us to really have a significant edge on the market. And we've beaten the benchmark accumulation index for every period: 12 months, 36 months, 60 months, 10 years, and since inception. So investor options. If you prefer to manage all or part of your own portfolio and realistically would like to get 15 to 20% compound returns, maybe Teaminvest membership is right for you. Or if you want to relax and have peace of mind, consider signing up for the Conscious Investor Fund. So they're the two options. And I'll just bring the book back again, or the report back again, if you'd like to get a copy.
Mark, thank you for your presentation. Do you have time for a few questions?
Absolutely. Thank you.
The fund is invested in USA and Australian stocks. So how does the capital allocation team decide the balance between the two?
Okay, well, there's not a set formula. At the moment, it's roughly 50-50. So it's about 50% Australia, 50% the US. The advantage we have in Australia is that we know the management of the companies really, really well, less so in the US, obviously. We tend to stay with the bigger companies like the Microsofts and so on in the US, but they still have to have consistent earnings and meet all of our criteria. That doesn't change. So we're shareholders. We bought Apple before Buffett did, as an example. So there's no firm situation on that, roughly 50-50. At the moment, we only have US and Australian stocks. In the future, we may start investing further afield, but that's where it's currently at.
How does the fund's performance compare to Teaminvest members' performance?
Well, funds by definition have a lot of frictional costs, and you have money coming in, money going out, so you have to sell shares where you don't want to, and so on. So the fund's always going to be less than members. So our fund has been, I think it's currently about 11.03 net after all costs and fees average for the total duration, which, as I said at the beginning, has given a double return on what the index is. If members typically getting 15 to 20%, so that's significantly more. 15% gives you 4 times your capital in 10 years, and 20% gives you 6 times. So it's clearly worth the effort to manage your own money, and you will do better on your own within the Teaminvest structure than you will in the fund. But it's more work. Yeah.
Thanks so much, Mark.
Welcome. Thank you very much, Angela.